Good evening. The Indian markets ended near the day's low, starting off a new trading week on a disastrous note. The benchmark indices held steady for most part of the morning session before turning lower in afternoon trade. They were on a downtrend throughout the afternoon on account of relentless selling across sectors. Indian markets opened on a flattish note, tracking losses in other Asian markets. Sentiment took a hit after European markets opened with big losses. Another wave of selling came after media reports said that the Macquarie's Asia hedge fund has exited its short position in Indian single stock futures in response to the proposed GAR provisions. The Macquarie Asia hedge fund has decided to use a future contracts linked to the NSE Nifty index on the Singapore exchange to get its short exposure to India, according to reports. The 1.5 billion US dollar Macquarie Asian Alpha Fund also cut its India exposure in March, according to the reports. Foreign investors have raised concern about the two recent tax proposals from the Indian government. One relates to overseas transfer of Indian assets, and the other is linked to investment made through the tax havens like Mauritius. The BSE Sensex was down by 277 points to close at 17,096, and the NSE Nifty was down by 90 points to close at 5,201. The India VIX on the NSE ended higher by 7.4% to close at 21.57. The BSE Mid Cap Index fell by 1.6%, while the BSE Small Cap Index was down by 1.5%. Out of the 50 stocks in the Sensex, the notable losers were Hindalco, Jindal Steel, DLF, BHEL, Infosys, Sterlite, Bharti Airtel, and SBI. Among the major gainers included Sun Pharma, ONGC, Reliance Industries, NTPC, and HDFC. The FOMC policy meeting and the US GDP data will be closely watched by the global markets along with the other global data points. For India, FI flows will be an important driving force besides FNO expiry and corporate results. The broader trend still remains uncertain, with the trading range getting extended to 5,200 to 5,400. A breakout is needed in order to ascertain near-term direction. Till then, the outlook remains cautious. Globally, Asian markets declined after data showed that Chinese manufacturing activity improved in April from March but remained in contraction mode. China's manufacturing activity contracted further in April, although the sector improved from levels seen in March, a preliminary reading from HSBC showed today. HSBC's so-called flash PMI rose to 49.1 in April, compared with a final reading of 48.3 in March. A reading below 50 shows contraction, with one above 50 indicates an expansion. Also, European stock indices fell sharply today, while the bond yields rose in Spain, Italy, Netherlands, and France. Thank you. Wish you have a great evening ahead.